It is 8:13 a.m. Chicago time on Monday, the 27th of July, 2015. I apologize for this massive delay. Word of advice, technical advice: if you do any updates to your software, make sure that you go back and check to make sure that automatic updates have not been changed. I'd like to do mine manually. This one went off automatically as soon as I started the broadcast system, and it set off a chain of 6 or 7 updates that I couldn't stop. Anyway, apologies for the delay. Here we are. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Some interesting news overnight pushing our markets down. The Shanghai index registers its worst daily performance since February 2007. Pretty bad. Sellers dominant from the open in Europe following drop in Shanghai. Shanghai down 8.5% over concerns on growth outlook. Gold is higher, oil is higher, U.S. is lower against the British pound, yen, and euro. There's an official request from Greece to start bailout talks, and they're planned to start on Tuesday, tomorrow. They were delayed from last Friday. The delays were more logistical in nature rather than political. And then finally, NATO is having an emergency meeting today regarding Turkey. This could be a new front as far as conflict. Turkey has bombed positions in Syria as well as in Iraq. They're fighting ISIS as well as the PKK in the Kurdish area. So it's another area to watch. But like I talked about a few months ago, 3 months ago or so, China remains to be the big piece of this puzzle, much more so than Greece. Greece only represents a couple of percent of Europe's GDP. The contagion effect in Greece from Greece is very high, though, as it translates into issues in Spain, Italy, and so on, and how those are handled. But I think we should keep an eye on China. I expected China to keep the volatility going throughout the summer. It kind of is, but it really isn't. The Asian session is not moving all that much on most days. Anyway, that's the news for you. Looking ahead, we did get durable goods this morning. The release came out for June. Durable good orders came in at 3.4% versus 3.2%. Durable goods ex transports came in at 0.8% versus 0.5%. So slightly better on that front. And then looking ahead at 9:30, we have Dallas Fed manufacturing activity expecting -3. Not a huge number to look for. Other than that, it's pretty quiet. Not much on the calendar for today. On most fronts, we have, as far as earnings, there's nothing major out there. Since it's Monday, a quick scan of the week ahead as far as economic releases. Looking tomorrow at the U.S. Case-Shiller and Housing Price Index, Services PMI, Consumer Confidence. Wednesday, we're looking for German consumer confidence, U.S. pending home sales, and the FOMC rate decision. Thursday, we're looking for German unemployment, CPI, U.S. core PCE, GDP. And then Friday is probably the most, other than the FOMC rate decision, Friday is the second most important or busy day, which is CPI and employment in Europe, Chicago PMI in the U.S., and Michigan confidence survey. Let's look at the market. What did we do on Friday? So, the expectation on Friday was for the market to keep a selling cap on any buying up and through 2103, the 2103, 2101 area. The expectation is for the market to be responsive up to that area as long as it does not exceed that area and get into the upper distribution. The expectation was for lower, and the bigger picture levels below were 2089, this naked point of control from the gap day up on the 13th. Then we have the gap zone. So we're looking for a void underneath the gap zone. And then from there, we're looking for a test of the next point of control, which is 6950. 6950. So what it did, though, couldn't even gather any steam on the buy side, left the closing price, closing gap open at 98.50, and then it proceeded to sell off to hit the 89 immediately, and then it went right through the gap zone down to the next area. This is an important area up here. This area here was let's put this up front. This area right here. Oh, let me change my pen. It's interesting. I'm back in Chicago, so I'm on a different computer. I need to stop switching computers all the time. Got too many of them. So here's the next acceptance zone right here. And we've pulled through the gap zone. The next area down is the next big area down is right there. The key target in this area, the 2075, and then the naked point of control at 6950. This naked point of control here, this line here, comes from the pre-gap day, and it's what pulled us out of this last big area. So I need to extend this. So you can see this this balance zone here ended with this day on the 10th of Friday. Monday we gapped up and then we raced up to new highs, and now we've pulled back and retested 2069.75 on Friday. 2069.50 is the point of control, naked point of control. Next big stop is 57.50 for this area. And that's what we would look for further selling. However, even though we've sold off pretty good overnight, let's look at the overnight session. Even though we've sold off pretty good overnight, we've just shifted our point of control down, and we've got a lot of energy built down here. We continue to push. So I'm looking for, this is a very trendy type profile. We had a failed high at the high overnight, and then we've taken back everything down to the point of control, small bounce, and we've been running since. This seems extended to me. I know that the trend is down and it continues down. However, I believe that we're likely to find buyers soon. It just does not seem like it doesn't seem to be finding buyers yet, but as prices are advertised lower, I expect buyers to start stepping in, and I see it on the tape a little bit. Next big area to test, 2057.50. The 2057.50 comes from the balance zone that was formed near the lows again, right here, from the 29th of June all the way to the 10th of July. This whole area down here is very, very well balanced. Look at this profile, very Gaussian profile, a very clear value area, and that's where we're headed. The value area high of this MC is the point of control, the naked point of control that we hit on Friday, and then we're pushing into the value area. So this 57.50 becomes a primary target. Today, I'm expecting some responsive buying on the open. So the primary hypothesis, as usual in these situations, inventory is definitely short overnight. So a lot of sellers in here. I expect that there would likely be some responsive buying into the open. A test of 69.50, which gives us the low of Friday. and then potentially a test up 73.50 if buyers show up, but I doubt that they do. I expect that I have not seen buyers step in yet. But don't forget, while we're doing this, don't forget that the overall trend is up. The market is uptrending despite this pullback. So when we look at the big picture here, so when we pull in and look at what is the market condition is really playing in balance. So, don't get overzealous here on the sell side. Don't start, piling on to your puts or whatever, selling calls heavily or anything like that. In my opinion, this is only pulling back. Nothing has changed contextually in the big picture. It really has not. So just be cautious. We've seen this happen a lot. So until we get down, way down below and start pushing back below 2035 or so, remember I talked about 2011.50 never having been tested from February. We usually test these MC points of control once we breach them. So you can see here we broke higher and we never pulled back to test this point of control before we made new highs. Okay, and I've been looking for that, but I'm going to caution you not to get too bearish on this stuff. It's not. This is just a standard pullback, even though it seems like the world's coming to an end. Anyway, this morning looking for some responsive buying to fail back up to 69.50. And then potentially a push to 57.50 as a primary hypothesis. Why? It's because we have pushed back into this large balance area. We're in the value area now. Remember, this is the value zone for this area. And since we have broken into value, we pulled back on Friday. We broke in this morning. I expect this to retest. Test 57.50 and then fail and then try lower and then balance before it finds any upside. So this morning I'm looking for it to do a little bounce and then push to 57.50 as a primary hypothesis. Anyway, I was going to scan other markets and so on. It's 8:26. You need a few minutes to get your head straight, and I don't want to eat up that time. I'll cut it off here. Good luck. Sorry about the technical issues, but it'll be better tomorrow. I'll catch you later. Take care.